Hello everybody and welcome back to another video. In today's video, we talk about stocks, cryptos, and commodities, and of course the key levels that you need to be watching right now and over the next few weeks. So it's been the story of the last couple of days, the rise of the FOMO and the MOMO. Yes, that's right. Options trading is back in force and it's causing some short squeezes through GME, GameStop, AMC, and Tesla. What's next for Tesla though? We'll be taking a look at some deep dives into the options along with our thoughts on the S&P 500 currently, Nasdaq, and everything else. So sit back as we go through it all. See you very soon. Well, welcome back everybody. Let's talk about the market close here for the markets of 23rd of March 2022. And we'll start off with the broad market. This is the S&P 500 large companies. We'll then get into individual stocks, commodities, and everything else. Remember, if you like stocks, commodities, or cryptos, smash that subscribe button. And of course, give us a thumbs up if you find value in today's video. Overall, you can see it was a sea of red, but certain sectors were doing well. But let's talk about really what was going on with the indices. It sold off in the morning, followed by a nice rally back to the peaks, and then another sell-off. Not a bad day trader's market, actually. Back to the peaks was a great trade off support, and then we moved all the way back down again to finish on the lows. What does this mean? Wall Street was selling the close. Is that important? Absolutely. When we're thinking about these rallies, we've had a massive ripper rally and it may be set to continue when we look at some of the macro environment. But overall, it was a risk-off day with money flowing back into minerals and metals, energy, utilities, and gold, some of the more defensive assets in the market. Why we talk about the fact that this rally could continue? Well, data would say that in years like this, midterm election years, March and April tend to do well. In fact, March and April tend to do well in the US market all the way from 1950 to 2021. If you took the data, April's one of the strongest months in the year. And we also tend to go towards, okay, well, what types of stocks should we be in for this period? I would argue some things that could be good are stocks that are in splits. They tend to do better. Of course, Amazon and Google currently in splits, some that have done quite well over the last couple of weeks. But it also is just this similarity that we have with any of these markets. Any market where you see a pullback, such as the Nasdaq in 2022, Nasdaq in 28, anything that jumps that January, February into March tends to have a recovery through a few months and then can continue on after that point. Think about midterm years. We've talked about this chart a lot. Here are all of the Democratic years, all of the midterm years, and of course, all together. They all tend to have that March into April, into back end of April rally, and then sell off. Why could they be selling here? Well, in May, we're going to have the FOMC. Also, just before May, we kick off earnings season. So when you think about it, it makes sense that we may have a rally here and that actually technicals might be telling us and already have told us that we need to be long in risk for now, even though it may go against everything that you think about the markets. That's the tough thing about trading. Sometimes markets can be irrational longer than you can be solvent. So let's talk about US 2-year versus 10-year. This is the canary in the coal mine. Currently, it hasn't inverted, but as we know, inversion of this really does show usually weakness in markets. 5-year, 10-year, 20-year, 30-year, they've already inverted, but certainly this is the one that most traders, most big investors do watch as a bit of a warning sign that things are going to get nasty in the upcoming future. Let's talk about the Vixx. The volatility index has been dropping consistently throughout this rally. It's dropped like a rock. So really, it is due for a bit of a turnaround. We'll talk about that very, very soon. But the rally has been severe, and that's caused the fear index to really drop off. Bonds also have been declining overall. Obviously, I use a little bit of a different bond indicator than this, but as you can see here, because of the rise in rates, we've seen a decline in bonds, but more than that, we've seen an overly large decline in bonds. And that's actually the key. The bonds have declined so much against the rates recently that it does still show that the economy is not that healthy overall. It's come off its lows, it bounced the last 2 trade day sessions, and hopefully it starts to turn around a little bit there. That would also be a good signal for people in the markets. Let's talk about some commodities first though. We'll talk about gold. It looks like gold's found a base. In fact, over the last 24 hours, it's done a lot of good market action. So here we have gold breaking through the last series of lower highs. 1910, that area that we've been talking about for a while. Here's the downward line. Here's, of course, the big resistance issue. It's broken through and it's moved to the 1950. Could it be that gold does well over the next couple of trading sessions? Well, it certainly looks like it may want to. And one of the things that you do is when gold comes through parabolic moves and tends to crash, if you do find base formations and you feel like, it's going long or anything like that, gold will tend to rally into fibs. And we'll look at oil to figure this out. But things like 50 to the 78.6, this area here is certainly a target if you believe this is going along. The base for now looks better than it has in quite a few days. So gold certainly improving, as is silver when you look at it on the charts. And if you go over to silver on the daily, it also had those tweezer bottoms on it over here. And I love tweezer bottom trades. That rallied, it's held the stop loss for now. And of course, if gold goes, silver will go. It'll just be a higher percentage. So if you believe in that type of trade, that's something you're certainly looking for. You would also like yields to drop at the same time. I'll explain that if you ever do the mentoring. I'll really go into how gold works, but it's not really an inflation hedge the way people think. It is good though in stagflation, if you believe we're in that. US oil, so it's recovering and continued to do well. We reported on this yesterday and we talked about the good looking price action. It's continued through. It's starting to get into our range. So we're here past the 50 fib after the parabolic run. The euphoria has dropped off. People are picking it back up. And at this stage, it looks set to be going for that 78.6 fib, which is around that 121, 122. So very strong movement here in the oil market, regardless of what the news says. You have to kind of ignore that. They might be like, we're suddenly weighing risks of Russia and the Ukraine or whatever it might be. That's just noise. The price action in the previous sessions, if you think about it, continued to show strength. Here's the resistance. Here's the bullish hammer. It breached this. If anyone was watching our webinar last night, we were talking about this. It breached it. And since then, it has continued to rally. So it's been a pretty strong little position there for a little while, and it may have some more time to run. So earlier we mentioned options, and options is key to the market and understanding kind of what's under the hood. Now, recently Tesla has been going phenomenally. In fact, the bottom to top now on Tesla, if we think about the low down here, not even the $700 low, is 37%. Some pretty big rallies. Once we breached through that daily 20 moving average, we were feeling very bullish about it. Of course, that had been something that held it down. And since that rally has occurred, so if you waited till the close and you were very patient, it's actually rallied around 20%. Not too bad if you felt bullish after that point. We know that the 945 is a big technical level. Obviously resistance, it breached through massive gains, and it even just got through 1,000 and then came back down. But what I want to understand is it's just becoming kind of almost parabolic in its movement. What's causing this? Well, it's the same thing that's really causing the movement over here. Short squeeze. And we've seen this before in 2021. We sometimes get it coming back in. The rise of the MOMO, the FOMO, all of that type of stuff. So let's take a look at the options. So these are some of the options that are open for this week in terms of expiration. Look at those calls, massive amounts of calls. I believe they're also on Apple as well. Anything that's retail traded heavily seems to have a lot of options on it right now. And sometimes even you can see here into April, there are a lot of options up the top. Sometimes the options become so overwhelming that they create effectively a short squeeze where the market is needing to cover those positions. Remember, it's all about managing risk books from these guys. I'm sure you understand the idea of short squeeze. So at this point, we have 16,000 options open on the $1,000 strike for this week. We have another 10,000 options open on the 1,050 strike. And really what you're watching here is not only price action, but you're also watching to see if these expand through the next sessions, because the more they go up, the power of the retail trader has been seen before. Remember, the risk covering and the expiration can lead to some pretty extreme squeezes that go on in the markets. So I think that's something that is occurring here on Tesla, and we need to be aware of it, that it isn't exactly a full on, okay, yes, technically we go from here to here. This is a potential of what we saw on AMD, of what we saw on Moderna, and what we've seen on AMC, GME, and even Tesla before. When Tesla breaks out, this is what tends to happen. Why? Because people get FOMO, and they go hard. And when you think some of the forums or even some of the YouTubers out there that are promoting and really pushing this stock, this is one of the heaviest traded retail stocks, and options is the game that's in town. So if they continue to push it, there could be some wild swings here over the next coming weeks, or especially the next week here for Tesla in the next few days. Supports to be watching, something around this 945. I think if it comes back down to this level, there may be some buyers that try to get back into this market. And just remember, there's going to be all sorts of manipulation caused by this increase in volume ahead of the expiration. So that's really what's happening here in a lot of these markets. RK, let's just quickly take a look at this. Bit of a weak 24 hours here, still through our downward trend line, still showing signs of positivity. And that's why at this stage, it's hard pressed to be overall bearish on the market. Yeah, sometimes it's good to be selling the rips, but when the technical analysis and other signals are saying, you know what, hold back there a little bit, it might be more dangerous to sell the rips than it is normally. We've been, of course, talking about selling the rips now for the last 2 months, but we cautioned against it last week because really this looks like a more real rally. Now, that doesn't mean that it's going to be a rally all year. Hey, I don't think so, not based on what we're seeing in the market and the economy, but certainly in the next month, 2 months, there could be some strength here based on the data, based on the technicals as they sit. Take a look at Apple, another breach of a downward trend here. Apple, very strong, uncharacteristically strong in the last couple of days. Why? I think because of the options. If you go and look at it, there's a lot of being opened by retail traders. Google, another one that even if the market pulls back here, we've got some strong levels for it at this stage. Of course, the triple bottom here, the breach out, and if the market does return, which we think it could on the S&P 500, we'll take a look at that soon, there is some strong buying pressure. Remember, this is the thing about the market. It's gone up so much now that when it comes down, buyers are going to potentially want to recommence. We got asked a question about NVIDIA this week, and people were like, what do we do about NVIDIA? We want NVIDIA. Well, here's the thing. You've got 2 long leg doji. Did you just get a decision made towards the short side? Another sign that maybe the market is going to come down. Now, obviously, Tesla's disconnected. GME, Tesla, and AMC, and even Apple are in their own little world right now of crazy options. But the rest of the market is kind of pointing towards this pullback that we'd hoped for. Why? Because things are weakening here. Look at this. But look at this level. You've got a 50 moving average, the blue line, a 20 moving average, and a 200 simple moving average all sitting on top of each other. The thing about these moving averages is you don't use moving average crosses, like that's old school. But what you do use is you can think about it as dynamic support or resistance. So if it comes down, what have we got? A lot of dynamic support. All these moving averages become support, and they enable that potential for a bounce or a pickup in the charts. We also have, of course, the triple bottom, similar to like a Google. The downward trend line sits around here as well, acting as another dynamic support. There's a lot going for NVIDIA around that 240 to 245 area. Certainly an interesting zone, and it may make sense when we start to look at our indices very soon. Another reason why it seems to be risk on right now is when you look at consumer discretionary. A bit of a top tip, if consumer discretionary is breaking out and looking strong, remember a third of the US economy is based on consumer discretionary, of course, spending and consumerism. If a third is based on this, we tend to usually see consumer discretionary go when technology goes at the same time, and they both become kind of hand-in-hand trades. Does it deserve a pullback? Yeah, with a rally like this, it would be nice to see it come back down a little bit. So let's have a look at some of the world markets. We'll start off here with the DAX. So the first one is the DAX. It's weakening. You can see it on the charts here. Not so good. The old DAX has found resistance. It looks like a little maybe miniature double top here. And certainly the bears will be looking at this and saying, you know what, I don't like this market so much so at the moment. I'm thinking it's going to come down a little bit here. Certainly could. Will there be buyer demand around these 13,800s and $14,000 levels? I think yes, there will be some form of buyer demand. So you've got to be careful here again. Even selling the rips, I think there's buyers at certain levels here. IWM, another one that's showing some weakness. Little bit of a range, finishes on its lows here coming into the close. If it breaches through, where's the next logical conclusion? You would think down to around this $200. Why? Previous resistances, potentially acting as support. One of the first things you learn in technical analysis, role reversal, supply demand, all of these types of things. This is an area that could find buying pressure. So there could be some weakness here coming through from the markets, and that market weakness may lead to a nice little zone, hopefully, that we see in the markets. We've been talking about it on the US 100. The US 100 hits, it starts selling off after that rally, then it sells off into the close. Remember, Wall Street selling the close is relatively significant. They pressure the market back down. Where are problems going to arise? The previous huge resistance sitting around this 14.2 level. 14.2 to 14,000. There's a lot of buying pressure that's previously been around these zones. So again, another signal or another area where even if the bears start to take control after this huge rally comes through, you could see buyer demand come back in. It's showing throughout all these stocks, whether it's Tesla at 945, whether it's Nvidia at whatever that price was, 245, whether it's Apple at the bottom of the overall trend line. Even though a lot of those are on obviously options, craziness, and they're completely in their own world, a lot of stocks are showing this. That's why the indices are showing the same thing. The S&P 500, very similar, 4,400 to 4,380. That area there, previous resistances, previous supports. Even if it comes down, where are you going to find buyers? 4,300 as well. So 4,400, 4,380, or the 4,300, they're both going to be areas where now that you've broken up and you've shown some form of consistency, traders will come into these levels. It's what generally happens in the technical market. You've also got a 20 moving average on the daily moving up, a very important one, and a 50 sitting here. What does that act as? Just like before, dynamic support. So it goes against kind of a lot of things that you look at. You see this market and you think, ugh, it's disgusting, it's sick. You might be a nasty bear and saying, you know what, I'm gonna get this market later on, I'm gonna kick its ass and I am short. I get it, I understand, but at the same time, when you're following the price action, does this show you weakness in the market yet? And you might say, well, I'm seeing weakness from the perspective of, let's say, divergence or something else. You could certainly be seeing that, but we haven't got a weekly close showing us it's weak yet. We really haven't got any other signal other than it's sitting on the weekly 20 moving average, and that's a little bit of resistance. Other than that, there's not too many signals. I did want to bring up why possibly the 4,500 is showing some points of problems. So while we have, of course, a huge amount of options interest in Tesla, GME, AMC that's blowing over, sometimes options just become so intense and so many that it pushes that market and creates effectively the squeeze. In the stock market, we're not really seeing an incredible amount of open calls, but certainly some significant ones around 450 and 455. If I was coming into Friday and I was a market maker, I wouldn't really want to pay these guys out. In fact, I wouldn't want to pay either of those out, ideally. If we could get it back down into the 440 area, that would be even more perfect. We'd make maximum money. Remember, max pain. So one of the reasons why it's pulling back a little bit is probably because of the amount of call options, the amount of FOMO coming back into the short-term market. Remember, retail traders do tend to trade the short end versus, a more experienced trader that might trade 1 month, 3 month, or even 6 to 12 month options positions. Let's take a look at Bitcoin. I want to just quickly bring up here Bitcoin shorts. It's continued to decline. As we mentioned, if it's holding low like this, it allows Bitcoin to possibly be stabilizing. And we've been a little bit more bullish over the last 48 hours on Bitcoin for that reason. It looks to break out here at some point. Of course, we still have 44,000, 45,000 being a big resistance. And if it ever gets past 46 again, I feel like that's a huge base and risk is really on back for Bitcoin. At this stage, it looks a little bit better. Let's check it out on a weekly just so you can see how big a deal it is to break this level. Look at this, the 20, the 50 sitting on top of it, all these crazy rejection wicks. You breach through a base like this, it's significant. Bears, it's going to be tough to be a bear unless you're sitting around 44, 45. And even this time, you've got to ask yourself the question. It's come up a lot, 1, 2, 3 times, maybe even 4 over here. Usually the 4th main time is the time it breaks. That's actually a scary one. Remember that. 1, 2, 3. Okay, cool. Maybe go with it. The 4th, don't ask me why, statistically not as likely to hold. Of course, 37K being the big support here for the bears in the market. Move over to Ethereum. That's been our stronger kind of conviction over the last day, though both have done pretty similar kind of percentages. And Ethereum, again, breaking from those series of lower highs, suddenly breaking through. Kind of looks like gold, really, when you think about it. And it's coming through. It's doing a little bit better. And of course, movement up towards that 33, 34 level would be fantastic. And of course, it's really going to follow Bitcoin. So in this case, Ethereum's looking better. The whole broad market of the crypto is looking much better than it has done in a little while. And that's because risk is on currently in these markets. Even with the US, even if it drops, we still expect some buyers to come back in, at least for now, until things change. And they don't show us changing just yet. Obviously, if you haven't already, come and follow us over on the Twitters, FX Evolution. We always post a whole bunch of stuff here. I will be posting a lot more next week as we really start to see some more direction coming through here. Hopefully we get that pullback. And just in terms of news, there's nothing really major coming out, but do remember daylight savings time shifts coming over the weekend. So just remember that if you're talking to someone overseas, it is changing here for UK, Europe, and of course, all of the places over there in compared to the US. So you'll have to just make that allocation to any key news that's coming out. Thanks so much for watching. If you enjoyed today's video, please remember to subscribe, smash that like button, and we'll see you in the next one. Bye for now.